Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to talk a little bit about what's going on in the markets. We're seeing another huge day of action on the heels of Donald Trump's announcements made at the World Economic Forum. We've got big breaking news out of the Russia-Ukraine war. We've also got a recap sort of on the Davos speech that really went over very, very well for the U.S. markets. I mean, U.S. stocks climbed. We've got a couple trade updates. We've got metals on the rally. We've got crypto on the ropes. We've got a lot going on. We've got the key levels that we have to know. We absolutely have to know for gold and silver. That's probably a great place for us to cover today. Also, natural gas coming out of absolute nowhere, trading up above 5. 5 is just an absolutely huge level. I'm going to go ahead and cover that as well. What we are seeing is the world in a state of flux. And I had some great meetings earlier today that were very, very instructive. I thought that some great questions, a lot of talk about what geopolitics is setting up to bring us the rest of the year. Moves on Greenland, moves around the world. Iran still in play, Venezuela in play. Russia, Ukraine looks like we're at a breaking point finally there after covering this thing for over 2 years. So I think that we're in an interesting type of a situation, a great time to be in the markets. Watch your risk. Build your account slowly. Don't take huge risks. I heard horror stories about people that are essentially gambling. They're taking shots, trying to make fortunes in the market right now. Even though that's tempting and we want to all make money and really get it going in the right direction, boy, I advise you to take this thing slow. If you take it slow and be disciplined with your approach, you're not going to believe where you're at in June. You really won't. So a lot going on. Let me see out in YouTube land. Jason, peace, Shane. Peace, Jay. How you doing? Looking good today. I'm feeling really good. I think that we've got an opportunity on a couple of trades. We had one great one here that we're going to recap in a minute. Tuku, good to see you, Tuku. Bobby Bob and Andrea Gorwal, if you guys have any questions or markets you'd like to look at all, be sure to drop them in the live chat, and I'll select a few, and we'll get after it. I think it's a great day to be a trader. It's always a great day to be a trader, but some days are boring. Today's not. All right, Bitcoin. Let's start with Bitcoin. A lot of folks have been asking me about crypto. Shane, what do you think about crypto? Why is crypto weak? Everything else is strong. Why is crypto weak? And I go, just take it easy. Don't worry about it. One of the big statements yesterday out of the World Economic Forum and Donald Trump was United States wants to be the crypto capital of the world. Well, it's not necessarily that that's going to be a huge arms race in crypto, or that the United States is going to buy crypto per se, like they're trying to buy Greenland. What you see is deregulation across the board. And deregulation is absolutely huge when it comes to cryptocurrencies. Anytime you take away regulations and you just let the crypto folks run, typically you're going to see an expansion in the marketplace, and that's absolutely fantastic. So when we look at something like that and see okay, then why is Bitcoin selling off? Because it's in rotation right now. We can easily see that. You see you got the big move there in November. Now you got a real tight area in December, and then January is sort of tight as well. We had a nice big rally, and what's your high for January? About 97.9. So we were right up flirting with 100,000. And now we've sort of turned around and we're headed back down towards our downside support, which is right around 85. I've been watching 85 closely, 85.5, 85.750. Potentially a trade idea coming your way here in the next few hours that may or may not deal with Bitcoin. Personally, I think that it's probably a pretty good time to buy, especially when you're looking at that monthly time frame. This Fibonacci retracement sequence has been great to us. That right there was your panic lows of April, and then right up there sort of your euphoric highs of October, up around $1.26. You're trading inside of 2025's range. So that's the biggest thing to remember is that 78% level. That's the last stand. If 85 breaks, if 85.5 breaks, then the bears will have it, and you're going to see that wash out down to about 74, somewhere in there, 75-ish, and we'll be bidders from there. I think that's a pretty good area to go long as well. And that's when we'll step back and take a look at what's really happened over the past several years in crypto, but we're not there yet. 85.750 is definitely on my radar to start off the trading session. I think it's an absolutely huge level. Probably going to have a trade idea coming out relatively soon from there. Okay, be sure to check out our Switch On, Shane Explains series. That's going to be kicking off here in the next several months. We're going to cover a lot of different things on that series. But if you're interested in getting your week going in the right direction, you're going to want to go ahead and enter your email address, subscribe to our newsletter. If I could speak today, that would be great. Markets aren't short on information. They're short on clarity. And that's exactly what we have to understand is that right now, everything's moving. So what I do is I take the Monday session, I take a look at the lay of the land, we look at the key news events, the key economic data, and then we pick a few markets out and we go ahead and dive into the analytics facing those markets and also what to expect out of the markets themselves. So you definitely want to check that out. If you're not a member of our newsletter list, definitely can check that out, and you're going to get that delivered to you every day, or not every day, every week, right ahead of that Tuesday UK session. Pretty good open. I like to take Monday to figure out what's going on. Very good day to game plan. If you're not game planning on a Monday, I don't know what else you're doing on a Monday. A lot of times Mondays aren't the time to trade, but we know that Tuesday, Wednesday, Thursday are, and that's exactly what we've seen today. So let's see, back out Donovan Johnson, Donovan, D.C. Donovan's in Washington, D.C. Good to see you, Donovan. Welcome. Yes, sir. Hey, yes, sir. Like I said, if there's any markets you guys want to look at, go ahead, let her rip. I'll be sure to cover those. We got a pretty good lineup that we need to cover, though, right away. We're going to start off with some trade updates. Let me see. Yes, sir, I got a nice buy on the Japanese yen in the Asian session. Glad I was done and dusted before it started to dump. Incredible volatility right now. We're seeing the dollar index behave more like I figured it would. You're down about 0.5%, trending down. And take a good look at just the heat map today. It's not a heat map, but a tote board. Green up here, red down there. VIX is off. The U.S. dollar's off. That correlation is very, very sharp at this point. It's an inverse correlation. When you see the dollar slide, stocks go up. Why is that the case? Because we believe Fed policy for the rest of this calendar year is going to be dovish. I don't believe there's any question about that. Trump talked about that yesterday as well. Wants to get interest rates way down. Wants to get home ownership way up here in the United States. In order for that to happen, price has to come down on houses. And there's some things in the works. We're going to cover his top comments here towards the end of the session. All right, let's go ahead and get on our trade update. US 100 in place. Iran fears weigh on sentiment. This was a trade idea from last week, and it cashed in big for 300 pips. Let's go ahead and get out to price action. Cashed in yesterday during, not necessarily during Trump's speech. Saw some good bullish participation then, but essentially what we got yesterday was just an absolute beautiful test of 25,000 and then a great bounce. So we're going to go to the shorter time frames. Big picture for the US 100. You've got a bullish pennant, no question about it. Nice big bullish run up, and then the compression on the monthly chart has really accelerated. If you can accelerate compression, that's really accelerated through the past 3 months. Now, anytime a market loads up, and this is what I call the load phase of a market, you're seeing everything tighten up. Tight, break. It's like blowing up a balloon, right? Tighter and tighter and tighter until it finally pops, and then you get your big move. We saw one of those in gold. We'll look at that in a second. One of those in gold that developed last summer. I keep coming back to that because this looks to be the same type of trade. It really does. The only way that this trade would be more perfect or perfecter, that's not a word, but the only way that this trade to the long side would be any better is if you saw that compression, this monthly compression, the top of it consistently hit 25,000 and reject it. I still call this pretty much compression around 25,000. Yesterday brought us a great trade, and it was good for, it wasn't an easy 300 pips, but it really wasn't that hard. You can see my lines. There's our sort of our triangle there. There's our pennant. And essentially, this was the trade. The green was our entry point, which is right around 25,175. Profit target was right up there at 25.4. Stop loss was down here, right around, 24,875. That really was the kicker. That was where the rubber hit the road. And these types of trades, we did it all on live stream. The trade idea is outlined. I approach them with a 1-to-1 risk versus reward ratio. You can give them a little more room to bleed against if you want, or you can look for more money to the top side. That's completely up to you. But the way that I approach trading is 1-to-1, and we've established a pretty darn good track record over the past several years of being able to call these markets with a little bit of consistency. Now, what's happened here is anytime I see this, I gotta get rid of that. I don't know what that is. Anytime I see this, and I see the price go down and sort of make sort of a run at my stop loss, and then reject my stop loss, that is about as good as it gets for me, because it shows that my stop was absolutely fantastic. Now, in this case, probably could have given it a little more room to run against me, but what I want to show you is that it happened, and it happened relatively fast. So right here, sort of when our price, boom, we could gap down to open the week, bang, bang, and then we get the big rejection on the Trump speech. This right here was Martin Luther King Day, so we had a market closure. Tuesday opened on the bear. Everybody said, remember the Sell America trade? Does anybody remember that live stream we did Tuesday? Hey, it's the Sell America trade. It's the Sell America trade. That's a load of crap. I told you it was crap at the time. It's garbage. And the reason why is everybody was trying to get that big bullish breakout, that bearish run going before Trump spoke at the WF, because they knew probably there was going to be a lot of things in there that suggest that, things are going to be headed higher here in the United States, one way or another, whatever you believe. The investiture flew into the market over the last 36 hours. There's no denying that. The US 100 was a beneficiary of that. If we take a look at exactly the trade that we wanted to execute, right here was sort of our entry, right? And sort of it opened up on MLK Day, really sloppy. This was really difficult because it was holiday trading, and then went up. And then this run right here that came across the board on Tuesday, this was the one that we thought we could get knocked out of the box on. Nice big rally, back up, was profitable, and then you saw sort of the roller coaster ride develop on the 20th, and then compression, and then right in here, right ahead of Trump's address in Davos, we went right down to the stop loss. Didn't hit it. Our stop loss was sort of down right around 24,875. The low there was 24,882. So that's way too close for comfort. But right there, boom, we just bounced up. The bidders were there, and then you got this huge jam. We ran right up as Trump was speaking, essentially. Nice big rally. There was your intercession pullback. Pullback went right to 25,000. Right to 25,000. The trade actually was underwater, and then it just blew up towards the close yesterday. It was really a nice trade, and one that I thought was good. I really thought it was good, and the reason why it was good was because of the stop loss. We wanted the majority of the action really to take place between our entry and 25,000. I did not feel good when we broke 25 because there's no real rules on how low you can go. So at that point, felt pretty vulnerable, but still the stop loss location was absolutely fantastic. It was absolutely fantastic. Our entry point was aggressive. I wanted to be very aggressive here, so we padded it 175 points. We could have just bought 25,000s and walked out of here and not even had any strife really at all. We decided to be aggressive because sometimes you just have to be aggressive, and this was a situation where it worked out. So now, I mean, the US 500, or excuse me, the US 100, very nice. We're trading much higher. We're well above that top side next level, which was at 25,475. Now we're about 25,550, and we have to really ponder the possibility of this market breaking and breaking big. So I was very, very happy with how that played out. I thought for a US 100 trade that isn't directional, this market's rotational. We've got downside support pretty much nailed, and that's 25,000. If you do get another opportunity to bid down there, it's definitely something to consider. Definitely something to consider as we roll deeper into the trading week and also the trading year. January is almost over, if you believe that. January almost over. Absolutely crazy. It's already almost past. Let me see. Nico Letterman. Good to see you, Nico. Welcome. Let me see. Paka, good to see you, Paka. Hello, Shane. Trump was right. We are headed to 50,000. He is always up to something. That was the quote. That was the quote. Quote of the day, quote of the year, quote of whatever you want to call it. I mean, when we talk US 30, we're talking 50,000. I think that he's tuning into these live streams. I think Trump's sitting around the White House. He goes, "What do you think about the Dow?" He goes, "We're going to 50,000." The big thing that he said, Paca, that was more important was this thing's going to double. These markets are going to double. And I go, I don't know about that. And everybody in the audience just sort of rolled their eyes. But could the stock market go to 100,000? Could the Dow 30 go to 100,000 by the end of his term in 3 years? Yeah. It's not because I really agree with Trump, but I see what's happening. It doesn't take a genius to see what's happening here. You're going to see rate cuts and dovish policy. I'm surprised the markets are as far behind on the rate cuts and what they have planned for the U.S. dollar as they are. We're still pricing in really sort of hawkish policy until May. And after that, I mean, we're only projecting rates to come down like a point this year, or maybe even a half a point. I think rates are going to come down 1.5 points. It's going to be dramatic. That's what's going to be the fuel for the fire. And the other thing is energy. When energy comes down, and a lot of it has to do with geopolitical strife. I mean, it really does. It has to do with the wars around the world and maybe some relative peace for a few years. If you do get that and the energy flows the way that it can flow, specifically from oil and natural gas, you're going to see a market in the United States that's going to have low interest rates to work with, and you're going to have cheap energy. Those two things don't typically go together. If you get that, could your markets rally? Yes. Can they rally without foreign investiture? No. You're going to have foreign investment, and typically what the foreign investment will look like is it'll be in the way of hedge funds and all the different things that those folks can do to pump stocks. But right now, the big round number of 50, there's no question about it that that's in play. Sooner rather than later, more than likely. So right here, the high is about 49,686. We do have a trade idea in from 50,000, I believe. I'll go ahead. I got to go get in our way back machine and pull it. But I do believe that we're going to have an opportunity there potentially to take a nice little short scalp, and it's a high probability type of a setup. You've never traded 50,000 in the Dow before. You are almost guaranteed to see compression in that zone. I would love to step up and sell 49,950s, 49,925s, 49,975, something like that. I think all of those give you a really good chance to get a pullback and without the big directional move and the huge break that we could easily see above 50,000. Let me see. I got a few market requests. Euro, Great Britain, pound, absolutely. What should I be on the lookout for tonight with the BoJ interest rate decision for the dollar yen? Yeah, we're going to go ahead and cover that a little bit towards the end of the stream there. The BoJ is sort of one of those things that we need to spend a little bit of time on. But right now, let's talk a little bit about the Sell America trade that turned out to be absolute garbage. Maybe later this year. Who knows? We'll see. I don't think so, but maybe. The Sell America trade is on. 5,000 is up next for the for gold, essentially, the XAU USD. You've got the big rally in gold, and you got a situation up there at 5,000, which is just like 50,000. These numbers are coming into play, and it's fast and furious. Right now, this is a 12-month chart. This is where you were last year, 64% gain, and this year you're already up about another 14%. That's an epic run. It really is an epic 3-year run. It's an epic 4-year run. I mean, that year back in 2023, you were up 13%. That was even a good year for gold. So gold has absolutely taken on a completely new meaning in the world. There's so much wealth being stored in gold, but also the trading activity is just absolutely huge. Let's go down to a 15-minute chart. I don't look at these often, but what we do want to point out here is the intraday action on bullion is up. The intraday action on bullion is up. So if you're going to follow a trend, this is what I would be doing, and I wouldn't consider doing anything else. Pullback zone, 48.97. Yeah, if you can get it. More than likely, this is going to creep a little bit higher, but I do like this swing low. So if this creeps up maybe to 49.25, somewhere right in there, you'll have a pretty good buy right around 49. So that's not a bad Fibonacci trade if you want to join the prevailing price action. Just remember, what are we looking to sell at? 49.992 is our trade idea. Is essentially why we pulled gold, 49.992. You definitely want to be aware of where this gold market is. It's trending higher. Our big round number to the top side is 5,000, and we are almost there. So I'm looking at 49.992. With a bit of luck, we'll get hit right there on the nose, and then we'll get the big pullback before we actually challenge 5,000, and things get a little crazier. As far as silver goes, silver is by far the story. It's the early story of this year. Last year, silver was up 147%. This year, silver's up about 34%. That gold-silver ratio is coming in, and it's coming in fast. And it's not because gold's coming down. It's because silver's going up. So what do we do with our gold-silver ratio? We divide the price of gold, which right now is 49.11. We divide that by 96.41. 96.41. What's our gold-silver ratio? 50. So about 6 weeks ago, it was half of that. Or excuse me, it was twice that. It was 100. So right now, we're seeing that gold-silver ratio come in a big, big way. Remember, gold's moving higher. Silver's just on the rally, and it's outperforming gold almost every day. Some days are bigger pullbacks, but right now it's gold and silver, and everybody's trading it. So I imagine many of you are. 100 is definitely the key level up there. If you wanted to sell right in front of 100, you could certainly do that. 99, 99.50s, 99.75s, the same basic premise as our gold. Probably not going to put out a trade on silver from 100. I think you guys basically get the idea. We've got one out on gold. Essentially, that could work out to be double exposure, and I don't want to do that with metals. If something crazy happens, you only want to rip the Band-Aid off and take one loss, not two. But silver, I mean, it is what it is. You could try to trade it. Well, you could probably throw up a 1-minute chart, and you can actually see what's happening here. Incredible movement, incredible volatility on a 1-minute silver chart for this time of day. That it really is noteworthy. Let's go down to a 5-minute chart and see what we have. So essentially, you've got the nice big run up. There's your pullback. Sort of show you the Fibonacci sequence as it was. This pullback right here looks like it paid off very well. Spike low there, that's where you would have started. Spike high there, pullback, beautiful thing, 38%. Now, where people run into trouble with Fibonacci's is they don't recognize the ranges that they should be using. Now, this range right here, you can see right here, you had a spike low and then some compression. You really wouldn't have worked from this spike low, and the reason why is you have another spike low right there. You want to stay as current as possible, and if you don't want to do that, then you step back to a larger time frame. Spike low there, spike high, sort of a double top, 38%, boom. Fantastic scalp. Right here, though, things are a little different. Spike low there, spike high, right? 5-minute chart. So you say, Shane, I just run a Fibonacci from there to there and buy. I'd say, you can do it. You can do it. A couple of things to realize. This range, this from that low to that high was a heck of a lot smaller than that low to that high. So when you're looking to play a 38%, you're thinking maybe just a little pullback and then a bounce. Boy, I mean, it clearly waiting for 62% the back end of that golden zone was the play. Now, you say, Shane, you're always showing us this stuff in hindsight. And I go, yeah, but it's pretty much the only way to show you how these things work. We can do it in real time, but to do so, we have to sit here all day long. And I'm making some strategy videos right now, and we're trying to get live trade examples, and it's tough. You got to sit there all day to get these things to set up and then also to execute. Now, if you're a full-time trader, you've got that kind of time. That's what your job is to wait and to execute and to wait for everything to play out. That's your job. But when we're going through and we're trying to cover as much turf as we can in like 30 minutes or an hour, then we got to bounce and we got to show you exactly how the thing unfolded right after it did. Believe me, we can do these things in live time. I've done it a lot on live streams. We can do it do it in lifetime. It's just going to take a heck of a lot longer to do. So in the interest of time, we try to show you the best examples of the concepts that we have going. And that's a pretty good one. The Fibonacci retracements, when things are trending, man, you're looking at 38% and 62%. You just got to make sure you have a range to work with. When the market flattens out, it's really tough. It's really tough. So what I would recommend when you're faced with this kind of situation, you're like, man, I don't know, adjust your time frame. 30 minutes. Is a 30-minute time frame here pretty good? Yeah, it is. Right there, sort of some compression early this morning. Then there's sort of your break. There's your big move. 30 minutes, you're up about 1.5%. That's why your margin requirements have been adjusted across the board. Very, very important that you understand that. But right there, 38%, right down around 96, 96.03. I mean, you really couldn't beat a trade like that on the 30-minute chart. Nice big range of about $1, $1.50. That's significant. That's a significant range. So a nice little silver bid from that zone, probably pretty good. Probably a pretty good one. So I'll be watching that closely. If I was executing trades on an intraday basis with silver, 30-minute chart rarely leads you wrong. It's just a little bit bigger. The ranges are a little bit bigger, and that gives you more room to work. For sure. Okay, we wanted to talk a little bit about the dollar yen. Let's start out with the technical side of it, and then we'll sort of recap what the BoJ is going to say and get into some of our daily fundamentals. The dollar yen clearly falling out of bed here, 30-minute chart. You've got a lot going on, essentially a trend day down. You're off. You're at even, but you can see during the U.S. session, you've got a big move to the bear. So you opened right up in here somewhere. I like to start Forex trading about an hour and a half before that Wall Street opening bell. So essentially, you were looking to come off here from about 158.69 down to about 158.28. So I misspoke. It's not a trend day. It's a bit of a pullback of 40 pips, but something like this. Dollar yen weekly chart. I absolutely love the weekly chart for the Forex. Gives us a great set of levels typically to play with nice big ranges. These Fibonacci's, it's not an accident. Sort of a double bottom, swing low right there, a spike low, nice high, sort of a doji, long-legged doji. Then we pulled back down and saw 157.50 and bounced. That's a beautiful thing. So at least technically from a day or from a weekly standpoint, still very much in bullish territory here for the dollar yen. Now, what can we expect out of the BoJ? Well, as far as the talking points go, what you're going to see here is you're going to see essentially we're supposed to hold rates static. They're supposed to hold the rate static at 0.75%. Right there, 0.75 amid economic review, ING. Yen falls amid risk-on sentiment. Eyes on BoJ meeting. GJB's steady, whatever that is. Mood BoJ's 2-day meeting kicks off. So these are just the headlines. You could check out all this stuff. FX Leaders has got something up there. I used to write for FX Leaders. Matter of fact, I still believe they have me listed as an analyst, so I no longer work for them. So if you see any of my stuff over there, if my name's on anything at FX Leaders, it ain't me. Somebody else is writing under my name over there. But you've got a lot going on here with the yen. So essentially, what is the big deal? The big deal is that the BoJ is hawkish. They're going to hold rates static at 0.75%. Now, we all know that a big part of Japan's economic prowess and their success and their game plan is predicated upon exports being hyper-competitive. And the way to do that is to go through something called the dirty float. And what a dirty float is you devalue your local currency, you adopt a negative interest rate on deposits or a negative deposit rate, and you make sure that there's always a lot of yen in circulation. And when there's a lot of yen in circulation, the actual value of the yen goes down. Essentially, that is what the BoJ and Japan has done, at least dating back to 2012 with the institution of Abenomics, that three-pronged attack to drive economic growth within Japan. That's the bottom line. We're not doing Abenomics anymore. All of a sudden, you've got a higher interest rate. The BoJ is worried about inflation. They're also talking about being hawkish, maybe staying where they're at for a little bit longer. And the rest of the world's looking to cut interest rates. So that's going to have a negative impact on Japan's export sector. There's no question about it. But at this point, the BoJ is weighing sort of the pros and the cons of having that inflation metric, which, given the levels of Japanese sovereign debt, I mean, it's one of, well, I believe it's the leader in the G7, I believe. So you've got a huge debt load there. A lot of it goes back to COVID and the Olympics. They went in, I believe the government fronted like $4 billion to hold the Olympics there, something crazy. Bottom line's this: what's worse, the inflation which they're trying to fight right now, or the lower economic growth. And that's where the tightrope is being walked there by the BoJ. Expect a hawkish BoJ tonight, yes, sir. I think you're going to see interest rates aren't going to move, and you're probably going to see a little bit of talk about, well, interest rates are going to stay higher probably for longer. We may raise again, but the way we're going to manage the yen is through our balance sheet. And they're going to talk a little bit about yield cap inversion curves. Good luck understanding that stuff. And then you're going to have to go ahead and talk a little bit about a bond buying program or balance sheet reduction. That's where the keys are going to be in tonight's announcements from the BoJ. They're going to roil the markets. If you're trading the yen, be very, very careful with that. We've got to understand what drives markets first. I don't know if it drives the yen up or down. I just know we've got a pretty good support zone down around 157.50. And then you've also got a deeper one if you want to be more patient, which is probably what I would do, 156.32, 156.50. That area down there on the weekly support zones, pretty darn good as well. So that's how I would be looking at the BoJ. We've got some news events that we're going to cover here in the United States that have sort of sent some volatility to the market, but not really huge blockbuster reports. All right, before that, we have one, let's see, we've got one other question here. We got a couple questions, and then we'll move on to our fundamentals of the day. Will you look at the Euro, Great Britain, Pound, please? Absolutely, Nico. Ask and ye shall receive. If there's any other markets, be sure to throw them in the live chat. I'm more than happy to cover them. You can see right here, we had some pretty good stuff. Pretty good stuff developed. You go, Shane, what do you mean? I go, well, clearly we were working a daily channel, right? Look at that. There's your channel. Boom, boom, boom. Pull back right there. Close beneath that channel. That thing rocked and rolled. Quick and dirty on how to trade these trendline reversals or channel breakouts. Essentially, you'd have been looking to short on a close. You probably would have been short there, taking a little bit of heat. You could have gone short there as well. Again, you got compression right on that lower trend line, and then you just broke. And when you broke, you really broke. We actually did a video over on the How to Trade YouTube channel on trendline reversals. It's all about the third touch. Right here, there's sort of number one, number two, number three, a little bit of support, rotation, and then you got that crusher that came to the downside. Very, very important that you understand that probably your stop loss would have had to be a little bit higher. If you put it right there on the top of this price bar, you got crushed, and then the market reversed. Remember, don't be a pork chop. Put that up there a little bit, at least pad it a little bit. And in this case, this is a daily chart, so your top there was 87.95. You're only talking about putting it up above 88, which is a big round number. You have to do that. I mean, that's that right there. That's 6 pips. That's 6 pip difference right there. That 6 pips is the difference between losing. All right, that's a difference between being stopped out and missing the big party. And that stuff right there, psychologically, that's what drives traders crazy. That's what puts people on tilt. That's a life wrecker. That's an account wrecker. You don't want to play that game. Be sure that if you're that close to a round number with your stop loss, if you're thinking of putting your stop loss at 87.96, put it at 88.05. Unless you're scalping, unless you're on a 1-minute chart scalping. But if you're taking positions and you're swing trading, give yourself the benefit of the doubt and the best opportunity of winning. And you don't have to keep it up here. You just hold it there maybe for that first day, and then you can come right down in here. Do whatever you want with it. But that initial rush that stopped everybody out, I mean, take a look at the top right there. It was 87.96.9, and the stop there, or that top was 87.95. That's called a stop run. Those stops got run, bam, came back down, crushed it. Very, very important we don't fall victim to those traps. That's absolutely huge. All right, let's get current. That was a couple months ago, it looks like already. All right, daily chart, a couple of things we could look to do. You could probably buy this market. I don't know, though. I mean, it needs to be a position buy. Nothing's going to happen fast for you here, given this framework. Very, very tough market, really, to sort of play breakouts on. The Euro-British pound is rotational. You need to understand probably the macro view, give you the best chance of success. Let's step back to a monthly and see where we're at. Okay, this interests me. Really, I mean, sort of a strong move, but ugly. I mean, sort of there's your swing low. This right up in here crushed everybody, compression, and then you got the dojis, and then we start to get that rounded top formation in that isn't too shabby. So let's go ahead and throw some Fibonacci's on this and see what we can come up with. Spike low there, spike high, 38%. Okay, that's a big-time trade. This is a big-time area right here. 86.25. Keep an eye on that because this low right down in there is about 82.42, somewhere in that zone. So let's move this up just a bit, just a smidge right there. something like that. And then this spike high, which is November 2025, that's the yearly high for this pair. That marks a very, very important place that we also need to keep an eye on. There's your pullback. This area right here, 13-month EMA, write it down, 86.27. You've got 86.27 at 38%. Oh, man, that's not just a little buy. That's a big buy. So you're probably looking at about an 86.35 play. Did we already test it? It looks like 86.44. So you can be patient with this one. You can wait for that level to come into play and make the trade. Right now we're trading about 87.01. So 86, anywhere from 86 and a quarter to probably 86.50 will give you a chance. 86.50 is very aggressive, though. So if you want to try to be exact with this type of level, 86.35-ish to 86.25-ish, probably going to give you that best chance at success. But that area right there is a big-time technical zone. Thank you for bringing this one up, Nico. I probably wouldn't even have looked at this market today. This right here, though, yeah, that's one of those you call the bookie on probably. That's that right there. I like that a lot. Okay, we got some questions here. Kabir, good to see you. Kabir, welcome. Could you please explain the gold chart? Are you expecting to reach the 5,000 level? Yeah, I mean, 100%. Here's the problem with me saying 100%, Kabir. As soon as I say we're going to 5,000, somebody's going to step up and buy it. And they're going to say, well, Shane said it. The problem with buying right now at 49.08 is you could easily see this stuff. You could see 4,900 hold in a big pullback down here to 47.50 before we actually get the move up there to our key level of 5,000. There aren't many retail traders that can afford to go along for that ride unless your leverage is very, very small. If it is, then you probably are a bidder at 4,900. We've come an awful long way to not test 5,000, but the problem is I can't speak to when it's going to happen. I genuinely can't. I don't know. It may happen today. It may happen tomorrow. It may not happen until March. We just really don't know. What we do know is 5,000 is a big deal. And I believe it was Paul Tudor Jones. It was one of the big-time legends of the investing game and the trading game that believed that key levels, a lot of people use them for stop losses and entries. He always said he looked at key levels as being magnets. So if this investor, somebody stepped up and bought gold from 2,000, 3,000, 4,000, they're expecting it to go to 5,000. That's the concept. We have come a long way to not test the water at 5,000. There's no question about it. No question. None. I have no doubt that we get there. The real question is when. So, we got all the scribbles and the telestrator and all that up on our key levels, and all that's great. But what I do want to point out, and it's worth revisiting because we've got a very similar formation that's developing. It's not as tight and it's not as beautiful, but this right here, this was it. Right there was your run. There was your bullish pennant right there. And it was all summer long in this market. We were sitting there. April, okay. May's compression. June's compression. July's compression. Even August was compression. And when that bullish pennant broke, it really broke. And we nailed it. There's no question about it. That's the type of trade that's life-changing. That's the type of trade that a lot of players are looking for. I know a gentleman in the Mideast right now, the Mideast region, that is trading stocks, looking for those that are going to make big moves. This is the type of strategy that you would be looking to employ on a stock chart, where you'd be saying, okay, what is it? It's a bullish pennant, no question about it. That's 4-month compression. We're starting to see that similar type of price action develop in the US 100. That's why when Trump's out there talking a big game, they see it too. They see what's happened. The sellers did not win. Where did this develop at? Developed right around 3,500. Right there was your top, 35. This is why I would have loved to have seen 25,000 in the US 100 be the top. That developed beautifully. Compression, compression, compression. And when it broke, it really broke. There's no question about that. They should teach classes on how to spot those types of setups, because when you get them, we're talking 90-day compression right around a key level of 3,500, which was an all-time high. It doesn't get any clearer than that. And it's easy for me to say now, but we said it every step of the way. And when you got the breakout, and then it was just a question of how high we were going. When we broke that, I said 4,000 is going to happen fast, and it did. There's 4,000. It happened, probably 6 weeks, maybe sooner than that. There's 4,000. Now 5,000. I think it happens in the next couple days. I really do. So to answer your question, Kabir, yeah, I think we hit 5,000, no question about it. No question. But when? We could easily falter at 49.50 or 49.75 and trade in that zone for weeks. So I can't tell you to take a position. If I knew that it was going there today, I would say, yep, buy it and walk away from it. But you don't have that kind of capital. If this market reverses, and it will, let's look at the daily chart. I mean, let's be really honest with what's going on in gold right now. Let's be brutally honest. Since this is sort of that reverse hammer, you have a hammer there. There's the bidders. If you had to guess, where do you think the stop losses are right now? Okay, we know on that hammer the bidders piled in. Okay, that's great for whatever reason. Where do you think the stops are now on the daily time frame? They moved them right there beneath each day's lows. No question in my mind. This is interesting. This pullback here sort of threatened the previous day's lows. This symmetry didn't hit it though. So where do you think the stops are going to go tomorrow? Probably right there. What happens eventually to retail traders? Those that are late to the party that bought here and here, they're going to get washed out. It will happen eventually. We just don't know when. But we're ready for that pattern. We really are. And what will happen is we'll push higher, and then we'll just be sitting here just ready to roll. Fibonacci's are going to be based from the bottom of that hammer, buying pullbacks all the way to 5,000. That's the plan. That's my game plan. I think it's a pretty good one. It's solid. Deep dive into gold. Let me see. Yes, sir. I love hindsight. It pays because you learn to know what you're looking for. That's exactly right. Like right now, by looking at that gold historical chart, I know exactly what I'm looking for. We're looking for 5,000 on the top side. Gets murky after 5,000 for me. I don't necessarily know that we're going that much higher in gold over 5,000. I see a lot of 7,500s. I saw a 300 call in silver today. Maybe they're right. I don't know. But I do know this. 5,000 will be a battleground. If it's not a battleground, then we'll be out of the way. We're not gonna take a big loss over 5,000. I promise you that. All right, let me see. Nico. Hello, Joshua. Good to see you, Joshua. Welcome. Nico, do you also look for swing setups from the 38% towards the zero level? Yeah, on the different time frames, the longer time frames. My bread and butter, though, I really like the scalps off of those Fibonacci's. Those are fantastic. Long-term levels on short time frames. I like it. I like it a lot. Community of traders around the world. Absolutely, OG. OG Gotti. Got it 300. Absolutely. We've got folks in the Middle East. We've got folks from the Far East. We've got folks from Canada. We've got folks in the United States like myself, the UK, Australia, South Africa. A lot of folks in continental Africa there. Also in the Mideast region. I already mentioned that. How about the Balkans or the Baltics? The Baltic Sea? The Balkans, excuse me. The Balkans. We got traders in the Balkans. So people all over South America. I forgot about South America. We've got folks down in Costa Rica, down in not in Argentina, but in Brazil. There's folks. So there's a lot of people trading these markets, and we got a pretty good community here. A lot of folks tune in every day. Let me see on a weekly or a monthly. Absolutely for the swing trading, you're looking at weeklies and monthly charts. But I also like to scalp those levels too. There's no rules saying that I can't go in heavy, take some off, and then leave some as a swing trade as long as things are going well. What you don't want to do is when things are going bad, let your scalp turn into a swing trade. That's how you run into trouble. All right, everybody. Quick look at natural gas, and then we've got to get into our fundamentals. I put it off long enough. Natural gas is worth looking at today. Staggering month for gas. Staggering. We're up 24%, but the damage actually over the last 2 days is a little bit worse than that. We're coming off of these tops. The biggest thing to remember here, Russia-Ukraine highs. That's absolutely huge that we know where that is, up at 10. And then these dramatic lows, a lot of reasons for that drop. I'm not going to explain them now. Had a lot to do with the ruble being pegged to natural gas being denominated in rubles. If you were going to buy it, natural gas from Russia, you did so in rubles, and the ruble was partially pegged to the price of gold. That brought gas prices down in a big, big way. So the currency war that the United States and the West tried to wage on Russia did not work. The currency sanctions did not work. In fact, they actually worked the opposite. something to think about there. In any case, you did bring down the price of natural gas, and right there, that was our big time zone, right around 475. That was a beautiful test back in March of 2025. Talked about that. We hit it again in November, and then right there in December. So this is sort of where the rubber hits the road for gas. 475. Right now we're printing 490. Let's look at our daily. Okay, so here's your daily chart. 920 EMA crossover. You've got a buy signal setting up. I don't know that I would ignore that one. That one's a pretty good one. You can see nice big move. We had a move of 25% yesterday on natural gas. That's astounding. Today, we're off about 0.75%. Big thing to look at here is sort of what happened. Open the week, gap up. Okay, that's great. Last week, we were sort of down there right around 3, and now we're up there around 5. I mean, it's staggering. So if we were going to do something like this with a little Fibonacci retracement, if I can find it, I've only done it 10,000 times. Fibonacci retracement, you could do something like that. You can see a retracement zone. To me, this area right in here, this 475, is where the rubber hits the road. If you're holding longs right now and that breaks, you're probably going along for a bigger ride. Let's go to a 30-minute chart. Okay, you got to sell on the 30-minute. 30-minute chart, sell on the 920. I definitely favor the daily over the 30-minute just because it's a bigger duration. More than likely, we could get a bullish bump. But this area right here is where the rubber hits the road for natural gas. If it breaks beneath 475, look out below. Definitely huge. Let me see, Nico, but EG you looked at today, wouldn't you see a weekly bearish rally as a contradiction to that monthly and bullish chart? Euro, Great Britain, pound? Weekly bearish rally as a contradiction to that monthly? No, I wouldn't. Monthly, multi-time frame analysis, Nico. Monthly, weekly, daily, intraday. This trade right here, that takes precedence. That supersedes everything. 86.25-ish, because you've got the EMA there, the 13-period EMA for confirmation at 86.25. No, that doesn't. If you want to short right now, I don't have a problem with shorting from 87. If you want to go short right now, no problem. Take your shot with whatever strategy you're using. Go short. I'm just saying that when you short this, you're probably going to get this thing to bounce in your face, at least periodically, from about 86.30. 86.35. So if you were going to short it, that would be a downside target that I would consider, or at least if I was on a short, I would be very, very careful in that area. I'd be watching that thing like a hawk, because bidders more than likely are going to put a maybe potentially a short-term floor in there at 86.25, and that's all I'm looking at doing. So my point is this: there's a million different ways to trade the markets. You're looking at one way, I'm looking at a different way. Just because I want to grab maybe some smaller points off of that key level doesn't mean that holding shorts is wrong to that zone. Horizontal support and resistance zones, that's how they work. We can trade them. We could try to take positions off of them. We could try to take scalps off of them, or we could just use them as confirmation or denial, I guess. What would you call that? Confirmation or rejection of a current trade idea. That's how I use support and resistance levels. That one, that's probably going to be a long setup for me down there. But if you're short, go for it. There's no problems with that. You can make money a million different ways in the markets. You don't just have to do it one way, my way, or anybody's way. All right, here we go. Week 3. Here's our fundamentals. We're going to burn through these. Wednesday was Trump's speech. That was the biggest market mover that we've seen this week. Thursday, US GDP, PCE prices, EI inventories. Big news day today. Let's take a look at what we had. Core PCE prices. Remember, this is the Federal Reserve's go-to metric for your inflation. Core PCE for Q3 2025 rose to 2.9% as expected from 2.6%. The GDP Price Index, which is related to the GDP report, came in at 3.7. That's well above the previous quarter as well. So inflation, that's not real great news on inflation, but it's not necessarily out of hand. We expected this. And a lot of the reason why we expected this is because the data is delayed due to that government shutdown last fall. So I'm still sort of taking these numbers with a grain of salt. The core PCE price index for October, remember, these are all delayed because of the government shutdown, came in at 0.2 unchanged. And then you also had the yearly number actually ticked down a little bit. But again, that's from last October. What does that really mean now? Not much. Not much. PCE price index for October came in 0.2%, so it came down a little bit. On a yearly basis, it came down. But that, once again, those are from October. Personal income from October fell. That's not good. That's never good when you're in an inflationary cycle. Core PCE Price Index from last November, these are becoming more current. I would weight these more than I would the October figures. Matter of fact, I wouldn't even look at October, but I see a lot of people doing just that. The November numbers came out at 0.2%. That was in line with expectations. Core PCE Price Index for November on a yearly basis ticked higher. I don't know that that surprised anybody either. The PCE Price Index for November, 0.2% and 2.8% respectively, ticked a little bit higher year over year. Once again, these data sets were delayed significantly by the U.S. government shutdown. Right here, the news of the day was the PCE Price Index. PCE Price Index in the United States increased to 128.09 points in November from 127 in October. It has reached an all-time high of 128.09 in November of 2025. So, even though our CPI numbers are coming down a little bit, PCE prices are still going up. That's not good, especially when you're in the Fed. The Fed looks to PCE, core PCE, as being the leading indicator of inflation. That's going to give them sort of an impetus to keep rates where they're at in January, which is exactly what we expect. I don't believe we get a rate cut until Powell's gone in May. I think the gauntlet's been thrown down by the administration. It's going to be very difficult to get a rate cut before Powell leaves his post. I had him leaving early. He may leave early to try to get out of the investigation that's been launched by the DOJ against him due to cost overruns at the Fed headquarters. And they're not just a little overruns. They're big overruns, and they potentially have him perjuring himself in front of Congress, congressional testimony saying that there weren't amenities in that building that are in fact there. That's a big deal. We're going to be covering that next week. I believe we have a Fed meeting to cover Fed announcements. Can't wait to see Jay Powell. Can't wait to see what he says. I think it's going to be a lot of fun. In any case, this is the trajectory over the last year. Inflation is far from being under control. To cut interest rates right now, probably not going to happen. It's going to happen later in the spring, and I have questions about whether that's the wise thing to do. But when Trump says the stock markets are going to double, you're going to have to cut interest rates way down to get that done. You really are. And what does that mean to inflation? It means that it has to continually build. There's no way it's coming down. All right, a couple other fundamentals that we need to cover, then we're going to sign off. I've gone on for a long time this week, but that's okay. This was big news. This broke just a few hours ago. We've got some trilateral talks. We're going to get everybody at the table. There's going to be Zelensky there. There's going to be Putin there. And there's going to be Trump there. And they're all going to meet in the United Arab Emirates, which is going to be a big deal. That's going to be something that's happening in this weekend. They said in the next 2 days. So they're going to gas up the jets and head on over and see what happens. A board of peace in Davos. Zelensky announced U.S., Russia, Ukraine talks. So what we've got here is we've got a situation where they're going to be high stakes. Don't expect this meeting to bear any fruit, but realistically, this is the first step towards a peace deal being struck in the Russia-Ukraine war, and it's been a bad one. A lot of you are in that region. You know a lot more about it than I do. I'm not going to even pretend to understand what's going on that front. But what I will say is we've been covering it for 2 years. We've watched the markets every step of the way, and I've always sort of said that this piece of the puzzle was sort of something that was constantly – the markets got used to it and they priced it, but it really was sort of not a depressant, but definitely a factor, a bearish factor for some things and a bullish factor for others, meaning I believe this is a big part of your commodities markets. You see natural gas and U.S. oil, UK oil at levels that are probably not going to be held. If you get a Russia-Ukraine peace deal and all of a sudden there's just that much more energy on the global markets as sanctions are lifted off of Russia, you're going to see those commodity prices drift down. That's going to be sort of a contributing factor to your stock prices going up. So this is potentially a big-time market mover. Now, is it going to impact things on Monday? I'm going to talk about this tomorrow on our Week 3 market wrap. I'm going to wrap it up and give you some tips on how to maybe protect yourself. I'm going to share a story with you that really, I heard this Wednesday and I couldn't believe it, but I'll share it with you tomorrow. But the big picture is this. The biggest news happens on the weekends. And this has the potential to be very, very big news, or it could be a complete fugazi and a fake out from both sides. You could see major offensives launched as they're at the peace table. We just don't know what's going to happen, but we're definitely watching that. As of now, we believe the 3 leaders are going to be there. You never know, though. At the last minute, a lot of folks pull out and send their envoys instead. Typically, if one person doesn't want to show up, then the other 2 won't either, and then you'll just have some really high-ranking officials from each delegation meeting and hashing things out. I probably think that'll be the case. I'm not expecting a photo op between Zelensky, Trump, and Putin anytime soon, but it may happen. We don't know. Davos, this was the big news from yesterday. Special address by Trump, United States of America. This right here, sort of the transcript of his speech. If you want to read it, I can go ahead and drop it in the live chats here from on our YouTube and in our trading room here at How to Trade. You can go ahead and check that out if you want. If you're interested in maybe reading the actual engagement, I'm just going to give you offhand what exactly I think are the most important parts of it. I'm not even going to read the bullets. I can tell you what the most important statements were. Number one, the statement about Greenland was absolutely huge. Trump talked about possibly acquiring Greenland for defense purposes, and that's the Golden Dome. All this bragging about the United States economy. You either believe it or you don't, whatever it is. The talk about inflation, we just saw today the jury's still out on that. As far as what we've got going with some of the business dealings, the AI, he talked a little bit about AI, but he also said the U.S. was aimed to be the crypto leader of the free world or the world in general. That typically is going to be a bullish market driver because it means deregulation. You can't grow in crypto if you regulate it. They're going to deregulate a lot of that industry. Me watching for crypto to rebound. You're already starting to see it out of Bitcoin today, back up right around 90,000. So we're watching for that rebound. Also, it basically was a bearish talk for energies, talking about bringing a lot of new oil and energies online. You also heard a little bit about, the peace arrangements, the idea that they're optimistic they can get a deal done on the Russia-Ukraine. You also heard Trump say something very important about housing in the United States, and it's something that's done all over the world, but sign an executive order that says the hedge funds cannot buy houses, single-family dwellings, as investment vehicles anymore. That could potentially bring more money into your U.S. equities markets because the hedge funds are going to have to pull out of single-family housing. They have billions and billions invested into that, at least in North America, in the United States, probably worldwide, but at least here in the United States, billions and billions are going to have to go somewhere. And they're going to probably be coming out of houses, coming out of those single-family dwellings and going back into the U.S. equities market. That was probably the single biggest announcement for me that could have been a market mover from that speech. Larry Fink, leader of BlackRock, was in the audience. Trump basically said, hey, I'm sorry, Larry, but you're not buying single-family dwellings anymore. That was just a major throw down the gauntlet. And aside from the Greenland saber rattling, that's essentially what you saw there. A couple other things we need to cover today. Petroleum status report you can see right here. Let's go ahead and take this down so we can read it. This right here, it was the big release today, 1 day delayed due to Martin Luther King Jr. Day. You can see right here, U.S. commercial crude oil inventories increased by 3.6 million barrels from the previous week. At 426, U.S. inventories are about 2% below the 5-year average. That's key. 2% below the 5-year average. We haven't seen it this low in quite some time. So all of a sudden, the U.S. inventories are building a little bit. Don't be surprised if maybe those inventories come up to scratch or maybe even a little bit above where we've been over the last 5 years, the 5-year average, as we roll into February. This is going to be a weekly trend to watch. 426 million, it's still a little bit light from where you need to be. But once that U.S. crude oil inventory is at least on par with the 5-year average, and those some of those oil stocks are sort of built up, it really contributes to the bearish side of the WTI crude oil market. So we're watching that closely as well. Let's go ahead and take a look at U.S. oil, and then we'll go ahead and call it a day. U.S. oil right here, interesting type of a chart. I'm still very bearish, even though prices are hanging around 60. A lot of the reason why price of crude oil as it is at 60 is your U.S. dollar is sort of losing market share yet again, lower dollars, higher commodity prices, and then also what we've seen out of potential geopolitical strife. I mean, the bottom line is this. You've got wars raging. You've got geopolitical strife raging around the world. We're talking about regime change in places like Venezuela, Iran. All of a sudden, people are talking Cuba. Cuba is being a potential area of regime change. You're talking about potentially the United States getting a hold of Greenland, at least some rights to Greenland minerals. I think that's absolutely fascinating. And all of those things, if all of those dominoes fall, you're looking at a potential glut of crude oil on the market for the foreseeable future. That's the bottom line. And what I mean is all of that oil that's sort of being held off of the global markets may be headed to market relatively quickly, and you could easily see price. Listen, I've been in a bearish crude oil market where we were looking at $29 crude, and you can't believe how high crude oil can go and how low it can go. It's the Wild West of trading. I think crypto's definitely taken that title. But this type of scenario right here, we were lined up and ready to sell right up there. 63, 67 was beautiful up there. 62, 36, we didn't get there, and now you're starting to see that bearish sentiment sort of really flex its muscles. So now at $60, what do you think of oil at $60? I mean, these numbers are not accidents. We see it traded every single day. There's your 30-minute chart. Let's take it right to 60, and we'll just sort of show, where things have gone. That's 60. We trade 60 religiously. Look at, we're above it, we're down, we're up. This is a 30-minute chart. We're down, we're back up, we're way down, we're back up, we're back up. It just is what it is. $60 crude oil seems to be the area of fair value right now. So if you're trading WTI crude and you're looking at today's price action, you're saying, okay, we're off about 2.3%. What do I want to get accomplished with today's trade? Well, right there, sort of that's when the traditional NYMEX open. You can see volumes are sort of up right in that zone. And then you get the big rush of volume into the cash open, which is right around, 9:30 a.m. Eastern. What could you say about the U.S. range? Sort of there's your U.S. range. This spike right here is right up at that daily high, and the U.S. high, the New York high. That spike right there, that spike low, and what do you have? 30-minute chart, your rally right there is to 59.32. I believe we're pretty much spot on. Let's bring that down to 95-ish, and then to our downside, there's 96. So you're going to go ahead and adjust that. So a late-day scalp, what exactly do you want to do? You're off 2.25% on the day. Late-day scalp would look something like this. Probably shorting right there from, say, 33 and looking to grab 5 ticks. Very, very tight. I mean, you're right there. Right now, you've got your CFD spread on that U.S. oil contract is right around 1 cent, which is fantastic. It's very, very tight. Let's go down to our futures market. Same formation. Exactly the same formation. So what are you looking at here? You're going to work right from that spike high. Current wave, something just like that, 38% right around 59.35-ish. It's the same trade. So something like that could really work late in the day. What you don't want to do is take a position from 59.35 or 34 thinking that you're going to get the big rally the big plunge down to like 58.50. In my view, that's not really the way to go about this. I would be looking to scalp that for a conservative profit target. All right, everybody, I do believe that we covered a lot today. A lot of markets, a lot of trade ideas. A lot of levels. We're going to have a trade idea out a little bit later today. We've been hit and miss this week getting those out to you on time, and the reason why is we had a couple of trades active. I didn't want to overload you, and then also the news has been fast and furious. Holiday on Monday, probably not the best day to put an idea out, and then we're looking at potentially huge breaking news over the past 48 hours, and so we're going to go ahead and get one out a little bit later today that I think is relatively solid. All right, $1 billion to join the table, absolutely. You got to have $1 billion to show up at those meetings. Let's see. You got it. Solid fundamentals. Not enough of it on social media. Excellent job. Yeah, I mean, honestly, everybody's cruising around in a private jet or hanging out near their Ferraris. It's a joke. They use the term influencer. A lot of people use the term influencer, and they're excited and happy about being an influencer. Let me be very, very clear. I am not an influencer. I don't care to be an influencer. I don't want to be an influencer. I don't want to do any of that. What I am is a trader, and I'm showing you my playbook day to day. We're going over strategies. We're talking psychology, and the reason why is to help. It's not necessarily because you can help every trader out there become millionaires and billionaires. I don't promise any of that. But if you're going to trade and you're wondering what making a life from the markets is, I can help shed a little bit of light on it from being in it a long time. And we don't sit back. We don't show pictures of flashy cars. We don't wave the Rolexes around. We don't do any of that. These streams are this is a lunch pail. This type of stream is a lunch pail and a hard hat. Here's what's moving the markets. Here's things you need to consider. Here's some key levels. Here's a few strategies that we're watching, places you can begin your trading journey. Here's you got a question, answer the question. So it's really, the attempt here is to be meat and potatoes, no flash. I mean, we're not flashy, but this is meat and potatoes, lunch bucket, hard hat. That's what we try to do here, is just really show what the markets can be from a pragmatic, conservative standpoint. There will be times where we take shots at the big money, and those times I don't believe are here just yet, not this time of year. You want to wait and really watch some action first. But as far as right now goes, this is fantastic intraday trading. pretty much every day. The volatility is there, and that's exactly what we need to trade. So I sure appreciate you joining me. Everybody that comes by every day, believe me, it's appreciated. If you have any questions at all, if there's anything I can do for you, head on over to howtotrade.com. You can sign up for the absolutely free access to the trading room and click on my picture and hit message. Send me a private message, and I'll get right back to you. And also remember to join our Switch Markets newsletter. That drops every Tuesday before the UK Open, before the London Open, before that London bell rings. And you can definitely check out what I'm looking at for the week ahead and also the key events. We try to deliver it to you in a pretty concise package, so you have 3 or 4 keys to look at every week. If nothing else, in a few markets that more than likely are on the move, and some key levels for those markets. All right, everybody, you're absolutely welcome. 512 Eli, you got it. The truth is underrated in the community. Nobody tells the truth. Not in this industry. Very, very difficult in the markets. I mean, there's traders out there that are truthful and they have made a lot of money and they want to share. But as far as from an educational standpoint, you do your best to really shed some light on what the markets really are, what a strategy is, where it's strong, where it's weak, where your psychology is, where you're strong, where you're weak, what you have to do to hold your own in this market. Because make no mistake, you're going up against the smartest, richest people in the world. And as long as you have control of what's between your ears, you have an opportunity to hold your own and succeed. You really do. The markets are that big. The volume is that big where you can do it. And when I say that everybody's sort of bending the truth or they're not telling you the truth, is when you see people out there driving Ferraris and flying the private jets, it's a sales pitch. They're trying to sell you. And they're trying to sell you on a lifestyle, just like all of social media. They're trying to sell you on a lifestyle that really doesn't exist. There's a few people in Davos that are flying on private jets. And, there's some of you out there that are going to start a trading career. And the law of large numbers says 1 out of every million is probably going to get into that realm. Somebody wins the lottery too, right? Somebody wins these huge giveaways in the lottery. So forget that lottery thinking. Forget the millionaire stuff. Forget the billionaire and the millionaire stuff. Think about, like I told you, the 9 ticks a day. What is it going to take for me to make 9 ticks a day, 10 ticks a day? That's how you can build some longevity in these markets and make it financially rewarding for you. Something to see. All right, everybody, I'm out. I'm going to go ahead and take out. Yep, Eli, I just want a little piece of the pie. I've been around a long time just nibbling at the edges. There's nothing wrong with a little piece of crust. Keep you fed. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.